Alright, it's the 23rd of November, and I will, week before Thanksgiving, or Thanksgiving week coming up here. So, I'm just going to do a quick review of the market and then see. Really don't have too much this week. Have some positions going into the week, but nothing really, no real big setups going into the week. Just a couple of stocks to take a look at. So if we take a look at the S&P, another up week last week, but no question, the momentum is sort of not really there, or if it is, you get the momentum spurts. They're very short term, and then so it's been kind of a back and forth environment, which makes sense after a move like this. But the pain, in a way, that's the pain trade, right? So there's gonna be no easy up move, but at the same point, it's not gonna be, we just keep leaking higher, right? So it looks like that's the way it's gonna be. I mean, I think you had a chance on Thursday where the market could have taken a shot lower. It held in quite well, reversed actually quite well, and then had the up gap on Friday. And I think everyone who was long was like, oh, okay, here we go, we're gonna finally get this nice up move. And what happened all day, it just leaked lower right back into the range. So I mean, it closed up for the week, but it was, I guess, in a way, kind of a frustrating trade. That being said, we're above all moving averages. I think at least going into tomorrow, the big level will be Friday's low. And if we take out Friday's low, everyone's going to be watching to see if there's any downside momentum, which we haven't been able to get any downside momentum now since the V bottom back in October. So. And every time we do get the potential for a break, say of some support level, it quickly reverses right back up. And anyone who got short looking for a move, had to cover higher or had to be real quick to get out without too much damage. That being said, on the Nasdaq, I do have a just this red. This is a no buy. Again, it's more. Hey, basically telling me not to be too aggressively on the buy side at these levels here. The oscillators, the way they're at, the VIX where it's at. It's basically a risk reward warning to not really be leaning on the buy side. So that's the way I'll sort of play going into the week. I do have a bunch of long positions going into the week, but again, it's nothing to really be initiating any long positions. We did have a pretty, a spike in volume on Friday, and obviously that's downside volume. We haven't really had that since back in here early November, which we really didn't get any follow through on the downside at all. But again, the key will be Friday's low, and then Thursday's low will be sort of the next level on the Nasdaq to be looking at for support. I wouldn't put it past one of these holiday weeks. People. They take Friday's low out. They'll, maybe they get a little quick flush lower, and then maybe another reversal and sort of staying in this range. But again, we'll see. I don't have a crystal ball, so I'm not going to sit here and predict what I think is going to happen. Obviously, you have to be quick on your feet and understand that anything can happen. You just got to understand where the levels are. And where the potential support resistance levels are. So last week we had the weakness in the Russell, and that was sort of one of those warning signs, I guess. But then reversed on Thursday. Actually, Russell was relatively strong with Thursday, but again we had this pretty nasty reversal on Friday. So we'll see how that develops. The key support here is actually Wednesday's low in the Russell, and we'll see if that holds up. And then the resistance is Friday's high in this. Friday's high, and actually the prior week's high is another level here above, just above 118 in the ETF. That's a pretty big level. So on the bull side, if we can stay within this range and maybe build a little, continue to stay in maybe the upper side of this range in here, then that may work to the upside at some point. But we'll have to wait and see how that develops. And that's it. I mean, the other thing I look at is this junk bond ETF. It continues to be in this downtrend. So although it has bounced a little bit off Thursday's low, but it still continues to be making lower lows here, at least. So we really want to see this maybe break that downtrend at some point. It's been sort of stuck in this since the summer. As far as the spread versus treasuries, it is higher than average, if you will, but it's sort of, at least in the relative past, it's sort of right in the middle, or in sort of a little bit to the upper side of it, but still no, like, short-term warning signs. I get the warning signs when you see this red. Those are those little shorter-term warning signals, and right now we're still. If we get the spread to pop, then we'll get some red indications, something to be concerned about. But right now, nothing other than the fact that it's still stuck in a downtrend. So let's go through some potential setups here. I like I was saying in the beginning, I really don't have too much. I mean, I'll be looking some things on the short side. GILD in the biotech space. Excuse me. At this right at this 100-day moving average, been sort of making these lower lows. I mean, I guess in the bull case, you can see, this is almost like an ABC, whatever. Pattern, maybe, and at some point this may actually, work out to the upside. So again, I'm just looking, just some levels. You can even say that's sort of a descending channel as well. So I'd say on the both sides, the short and the long, on the short side and on the long side. On the short side, if we do break this 100-day, basically this $100 level, I think is definitely some support here. We briefly almost touched it on Friday, so it might be worth a shot to get short, maybe get a flush out, and again, see how it reacts to a break of 100. I was short here when we broke this 105 and 75. So we'll see if we get another move to the downside or stabilize, or even, on the bull case, we do break 100 and then quickly do a nice reversal and then break, work out here to the upside and try for another move higher. So these are the things to look at in GILD. Price line, another one. This is actually, I like this a little bit better just for the fact that it's sort of, as a GILD is above its 100-day, this is below its 100-day, so it had this bad earnings, although it did definitely get a bullish reaction since then. But in essence, it's just sort of didn't even fill the entire gap here from this gap here, and now looks like it may be potentially wanting to break below at least the shorter term moving averages. So something maybe to get short below Thursday's low, roughly 1148. Again, same thing. See how the market reacts to that support level getting taken out. I'm not. Again, in this case too, I'm not saying, hey, this is a nice long-term short position, but it's a nice little tight pattern here, and it could resolve to the downside or continue to stay in here and at some point resolve the upside. So again, something to keep on your radar. And then what else did I have here? Twitter. Again, this has been a horrible trade, as far as swing trade. I mean, this thing just sort of, since earnings, it's just kind of all over the place. I guess intraday there was some opportunities, but again, it's relatively weak. maybe a shot below is 39, 39.20 area. Maybe take it, try for these 38.80s and maybe lower. Again, something to just keep an eye out for, take a shot. Probably one of the better positions I had on the short side last week was Netflix. Sort of when they took these 376s out. In hindsight, the money trade really was, and it came in. It actually gapped higher on this day here, and the money trade was really that green to red trade, and I wasn't on top of that, unfortunately, because that was the better risk reward trade. But got short this 376 and got whipped around a little. Here was the short term. I have this algorithm that runs on it. So, got short, pyramided in, and then kind of reversed, got out, got short again, and especially into that Friday reversal. So we'll see. It closed on its lows on Friday. We'll see if it can go, make a move, lower. I think I have a Fibonacci target of 354, I want to say. So it's a few points away from that, and really longer term, this looks kind of hideous here, especially with that big gap remaining unfilled. And now, it definitely got a nice bounce off that, but now it seems like it's petering and falling right back apart. And I think at some point in the future may be revisiting these lows here of 330. So I think longer term, this is definitely a better short position to stay with, at least until as it stays below these moving averages, and you can destroy these like a downtrend line. You can always stays below and underneath these shorter term moving averages. It's definitely probably a good medium term short, long to medium term short. Other than that, I'm carrying a few long positions. Still long Apple, and it's been a great move, but that's a pretty potentially vicious reversal on Friday. Definitely got some volume coming in there too, and so I think if you're holding any profits, maybe using Friday's low to scale out of some, and then these shorter term moving averages come in somewhere down in here. I think you definitely probably want to see it at this point hold around the 115, because I think that was one of my original targets. As it broke 103, I was like, all right, I did a Fibonacci target, and I think I got like 115-ish in that as a target. So would like to see that hold in at least the next, like I said, a shorter term support, and again plus or minus a point. I think 113-ish here as well is got some support areas. So ideally we hold in here, give it a few days, a week or so of rest, just do some work in here, and then maybe do another move. Although I wouldn't put it past Apple to all of a sudden just do this vicious, down trade, just really to because this, looking at it in hindsight, it's been a pretty easy move to stay, keep long in. At some point they may want to wash somebody out, me included. So it's just something to think about and watch here in Apple. YHOO is another one. I had a much bigger position and sold it right on these. I want to say on the right 49 and change. I don't think I made it above 50. I do hold a longer term position though in it. So I think 50 is a big level in YHOO to want to really see this 50 hold and see how that develops. Let these shorter term moving average, the 21-day catch up. Let's see here. PH is another one. I hold a longer term position, and this is actually nice. It closed at pretty much all-time highs here above above 130. Got a little messy in here, but again, I think that's just the way the market is now. The momentum's out of it, so chasing a breakout, they're going to make you pay. You're better off. I mean, you could play that, but just you might want to be, keep your stops a little bit. I hate to say wider, but you might need some room, or wait, get out of it, and then when it does, bounce back and move, then get back involved. So that's something that seems to continue to work. So that's it. I mean, I just don't have too much more this week, and like I said, I think the risk reward is getting a little bit more tougher to be to be trading active. I think at this point, it's you're better off holding some positions, leaning on some levels and letting them work, and not being overly into risk. This is one I bought. Eastman Chemical had a nice little flag here. Bought it. Again, I got a little whippy, but then Friday's it just had a pretty good gap up. So we'll see. I really want to see Friday's low hold up here, and maybe can do like the PH trade we just saw. Do a couple days in here, and then maybe try another move higher. Yeah, that's all I really have tonight. And like I said, good luck this week, and yeah, take it easy. It's a holiday week, so yeah, enjoy the Thanksgiving. All right, thanks for watching.